in Miami, because we own a lot of property in Florida, 6,500 units, you can probably find a good rental in a good location for about $1,800. One might think the American dream is over, but I know how many of you out there have it so embedded into your psyche. I must own a home. I gotta own something that's mine. How do you own it? How do you own it when you put $80,000 down, okay? 20% is the down payment on a home today. You have to have better credit than before COVID today. And you're going to make a payment for the next 30 years. Oh, I forgot something. Property taxes. Property taxes. Property taxes on an $800,000 home or $16,000 a year. That's another, is that right? What's 2%? 0.02%. Let's see, 400,000 times 0.002. It's another $8,000 a year. $8,000 divided by 12 is what? $666 a month. So that's plus another $666, $667. So it's $2,200 plus the PMI, plus the insurance, plus the maintenance, plus $667. You guys are like, oh my God, I can rent less than I can own. Where I live, you say, the rent is so expensive. That's right, rent is climbing in America, and it's climbing at the same pace home ownership is. Home ownership is actually going flat or down, but the home prices, home prices are actually going up since COVID. Further, rather than mourn this one ideal, I would prefer to see you, Johnny, I would prefer to probe the roots of the paradigm shift where people are actually starting to think about, hey, I'm going to switch from this home ownership idea to how can I rent where I live so I have mobility. This is what's happening in America, okay? Today's show is called Renters Nation. Call me if I'm wrong, 305-865-8668. I'm telling you, you're going to have people shift. We're probably at around 61% home ownership in this country. You're going to have this shift to where people are going to be like, I want to rent. And there's going to be two groups that say this. You're going to have the millennials that don't really have a choice, okay? This is going to continue to grow. And two, you're going to have the baby boomer that will be a choice. This will be choice driven. People like me that like, I already owned a home. I owned a home already, okay? I've had 2 homes. I've had 3 homes. I don't want to mow the lawn anymore. I do not want to fix my roof. I do not want to paint the place. And I do not want to be stuck when I'm 64 years old in a house when I could go on a cruise. America's becoming a renter nation. In 2004, home ownership rates hit an all-time high of 69.2%. That was in 2004. After which they declined for the last 12 years, leveling out in 2016. There's going to be a little spike right now because of COVID, and then that thing's going to pull back down again. There's been a slight rise as of late, but there's ample evidence that suggests this modest upward trend will not return us to record territory. In fact, many signs point to a decided shift in the favor of renting. Why? Renting flexibility. I get to do what I want, go where I want. What? I'm tied down for 10 months? How do you compare 10 months to 30 years? You don't undo a 30-year loan, okay? Understand this, folks. When you buy a $400,000 house in Miami, and then let's say you go out and spend $20,000 to furnish it. You spend $5,000. Let's say you spend $10,000 to rehab something, to fix something, to put a porch on. I mean, you can go through $10,000 pretty quick, right? This studio costs what, Johnny? What do you think we spent here?
I would say probably like close to 200.
200 grand in this studio. And this isn't the first time we've had a studio. So let's just say you spent $420. Let me change this to 20 grand. 20 grand to fix something, okay? Now you're in at $440,000, okay? Keep in mind that when you bought this, the real estate agent made $24,000. When you go to sell this, the real estate agent is going to charge you another $24,000. The day you buy this, fix this and furnish this, if you sell it furnished, you would need $464,000. The day after you buy it, to break even if you didn't make one payment and if you didn't pay property taxes. That means you close in October. You sell in November furnished, you would have to make, is that right? $464,000. $64,000 more than you paid for it, 15%, about 15%. Flexibility, folks. Many people are making the deliberate and long-term choice to rent because they like their freedom and their flexibility. They value freedom and flexibility because this Band-Aid, I want to own my own home, has been ripped off the American psyche, and it gives you the chance to change jobs, to relocate to a new city at a time where jobs are relocating, companies are moving. The days of spending an entire career in the same place, the same firm, same location for 30 years is long past, okay? Number two, the Great Recession impact. 2008, millennials, many of whom were in their very most formative years. During the housing crisis, 2008, 2009, and 2010, they watched their parents go underwater in their homes. They watched the home, the American home. Owning a home is a dream. Why is my mom and dad trying to get rid of the home? Why are we being foreclosed on? Why are they worried about everything? Why are we getting late notices? Everybody became aware in 2008, 9, and 10 that a home is actually not an asset when you have these pullback in valuations, okay? The lingering effects and fear about the next recession dampened probably 80 million strong millennials forever. Okay, 3, retiring baby boomers. There are more baby boomers today ensuing on the burden of home ownership in their golden years. They're like, I don't want this, I don't need this. I don't want to be locked down. I want to go travel the world. By renting, they no longer deal with home maintenance, repairs, and they free up their well-earned time and money. We've all seen the guy with the big mustache on TV. What's his name? Good hair.
Good hair.
Big mustache. He does the negative equity, negative mortgage ad. You can borrow against your home and never pay it back. He's got that voice. He does Blue Bloods. He does the show Blue Bloods. The lead in Blue Bloods.
We gonna find out.
Tom Selleck. We've all seen that ad where he's doing the reverse mortgage loan, talking to in a deep voice. They're not going to take your home from you. They're going to give you money every month because you have equity. So you can travel the world. See, that's the point, man. Baby boomers today are be like, man, I've already owned a house. Okay, that's not how I made my money. By renting, my mother in her last years rented an apartment. She's like, I don't want a house. I said, I'll buy you a house, Mom. She's like, I don't want a house. I don't want to take care of it. I don't want to worry about it. Light bulbs goes out in the kitchen. I want to call somebody and say, come fix my light bulb. By renting, you no longer deal with home maintenance, repairs, and you free up your well-timed, your well-earned money and, most importantly, your time. We got some callers, right, Johnny?
Yes, sir. We got Alex in Canada.
Alex, what's going on, man? In Canada, Alex, do people want to own or do they want to have the freedom of renting?
We want to get the hell out of here, man.
You want to get the hell out of there, man? Where are you going?
Yeah, it's well, right now I have a single-family home in Edmonton. Now, I want to move out to Vancouver there, but right now it is a lot cheaper to purchase up in Edmonton than it is Vancouver.
Yeah.
So what would you say? What would be the play? Like, do you think it would be good to maybe purchase something here and then flip it, or move out there and kind of start and be mobile and free?
So, look, I mean, you got to go where you want to go to live. You might want to live in Singapore, Dubai, or here in America. Like, I'm not going to buy a piece of real estate because it's cheap. I mean, you want something cheap, dude, why don't you go to, go to Saskatoon.
Go to Dakota.
No. See, I know where Saskatoon is. He knows where Saskatoon is. You guys don't know where it is.
It's in Canada.
Saskatoon, man. So Saskatoon's probably cheaper than Edmonton, right?
It is, yeah.
Yeah, why don't you go to Saskatoon? Why don't you go to Winnipeg in the dead of winter, February?
Or China.
China.
He said for China.
Yeah, well, fair enough.
Yeah. So Dude, that's what I would say. Now, let me just say this about Vancouver, okay? Vancouver is benefiting. I mean, every piece of real estate in Vancouver is benefited by the influx of Chinese moving into Vancouver, right?
Yep.
It's not Canadians moving to Vancouver.
No, they bought it all up and everything's expensive and there's empty houses and apartments out there.
Yeah. So they're empty.
Yeah, I think you could go out there and probably rent on Airbnb and go wherever you want, right?
Yeah. So all I'm saying to you is, particularly in cities that appear to have these big, I think there's 16 million. No, it can't be that many. 16,000 I saw today. Empty apartments in New York City. Okay,
Wow.
Now apartments in New York City aren't like apartments in Miami. Apartments in Miami, folks, are apartments. In New York City, apartments that's a condo.
It's a closet.
It's a condo, but they're called condos, but they refer to them as condos there, or apartments, okay? So look for places where you can move in and out. All I'm saying to you is 10 months is not a very long period of time. 30 years is a long time. So before you guys go out and buy something because you think it's cheaper, remember, to buy a $400,000 house, okay, I could rent this house for probably $1,800 a month, maybe $2,000, maybe $2,500. Maybe I rent for $2,500, okay? I would rent it for $2,500 before I would buy it for $400,000. Because once you buy it, you're going to fix it up. You're going to make it like you want it to make. You're going to paint it. You're going to roof it. You're going to do something with the landscaping. There's no way you're not going to end up at Home Depot. If you buy a house, you're going to Home Depot that weekend to do something to it. You got to make it yours, right? So you're going to put your little flower pot in front. All that costs money. Now you're in this thing at $440,000, $464,000. Look, I know plenty of people that have bought homes for millions of dollars. What's the guy's name? Simon Cowell. He bought a home in Beverly Hills. He lost $1 million on the home, plus he rehabbed it 3 times, 11 years.
Damn.
He sold it for $1 million less than he bought it 11 years ago. Everybody's like, you always make money on a home. No, you don't always make money. Rehabbed it 3 times, $1 million loss, property taxes for 11 years. Okay? Johnny, you got another caller?
Yes, sir. We got Muhammad in London.
Yeah, Muhammad, man. Look at him. They're calling in from all over the world today. Muhammad, do you have a deal or do you have a question?
Hi. I have a question for you, Grant.
Yes, sir, my friend. Good. Thank you for calling.
First of all, thank you for the last 14 days of TEDx. I've tuned every night, and it's been amazing.
Thank you, my friend.
So I'm in London, and I'm interested, based on your assessment of home ownership trends in the US, how do you see that happening in the UK and in Europe? Do you think we're seeing that flatlining or dropping as well?
Yeah, so look, London's always been, the UK's always been, some of the most expensive real estate in the world. Is that fair to say?
Yep. Sorry, I can't hear you very well.
Yeah, so I just said London's some of the most expensive real estate in the world, still today.
Yeah, that's right.
When I go to London, the last time we were in London, we came home, even though you guys at that time were having a bit of a problem there, particularly in retail. We came home and said, we need to buy everything in America. So like what's it cost to rent a 2-bedroom in London? Okay, what would 2 bedrooms, say 1,000 square feet? I think that's like 600 meters to you guys. I'm not sure exactly how that works, but what's 2 bedrooms?
Okay. I work in square feet as well.
How much would it be?
So you say 2,000 square foot?
Yeah, say 1,000 square feet in London.
So on average, I would say, like in my area, 1,000 square foot, you're looking at paying about £500 to £600 or like $800 per square foot.
$800 a square foot. Not for rent. No, for rent though. So that'd be just to rent it.
Yeah, so I would say look at 3% of that. So probably like 2,000
Yeah.
$2,000, $3,000 a month.
Okay, so $2,000 to $3,000 a month to rent. That's right where we're at right here. Probably a little more expensive than America. America is going to be about $1,500. Average rent, I think, in America, just under $1,500, a tad under $1,500. Landlords slash rents up to 20% as tenants quit city centers in pandemic, okay? Meaning supposedly the tenants weren't paying, so they're slashing the rents there. But folks, look, you're not going to buy a house in London for $2,000 a month. It's going to be $3,000 a month, $4,000 a month, and it won't be in London. It's going to be a 40-minute drive to get back in London. And anybody that thinks these cities are dead forever is crazy. I would just say in America, America will continue to benefit. Its real estate will continue to go up in value as countries move here. We're going through this election. There's a lot of uncertainty going on right now. The COVID thing should go away here once everybody understands it's just the flu. I'll say one other thing for home ownership, okay? When COVID hit, and for renting, when COVID hit, people weren't, they didn't worry about their office. They didn't worry about where they worked every day. They didn't worry about, couldn't go to church, couldn't go to the store, couldn't go to, like, everything got closed. Retail got closed, churches got closed, apartment buildings stayed open, your house stayed open. People could still go to that place. Food, water, housing. Retiring baby boomers. Boomers are leaving the burden of home ownership in their golden years. They're trading in for renting. They no longer deal with home maintenance or repairs. When we travel around the world, we rent. I'm going to go to St. Bart's. I'm going to pay some ridiculous amount of money to rent a place in St. Bart's, 6 bedrooms.
It'll probably cost you the same as buying a house.
For a whole year. I'll pay in St. Bart's in 2 weeks probably what I pay to live at Regalia all year.
Damn.
So what, dude? So what? You waste a little money, man. I deserve it. Okay. When you travel, when you go to a hotel in New York, do you pay more than you can? Of course, you pay as much in 3 nights as you would pay to live in your house. Why did you go there? You went there for a reason. There's nothing wrong with using where you are. That's what I'm saying. Single family home rentals today, by the way, are getting a big spike. Renters aren't limited today to just apartments. Using Airbnb, home rentals, rental markets, people buying houses in Vegas right now, saying, I'm going to rent these. Those who want to live in a single family home without the mortgage and maintenance burden can find rental homes today in nice neighborhoods near good schools and other amenities. Some people want to live in a house. They're like, I want my 1,700 square feet, I want my yard in the back, and I want my barbecue pit outside. That's what I want. That's what I have to have. You don't have to buy that to have that, okay? There's limited inventory today. The supply of homes for sale is declining in America, not because people don't want homes, it's because the home builders aren't building homes. Check this out, okay? Home builder, let's say a home builder is going to spend $400,000 to build a house. He's got to sell that house for $480,000, a brand new house for $480,000. He may or may not be able to build that house for $400,000 in your city. Let's say he marks it up 20% and sells it for $480,000, okay? And then he's going to go do this 10 times or 20 times or 50 times. That's going to be $4.8 million that he's got to sell. He could say, you know what, for the same $5 million, I'm going to build an apartment complex, or $10 million, or $15 million. What the city really needs is apartments at $1,500. It's going to be easier to sell and flip that. It's more desirable actually for the builder today to have apartments to sell to a guy like me than to sell a house and have to sell 10, 15, 20, or 30. You got to understand the Kaufman Broads, the big homeowners, they're not interested in selling 10 homes. They need to sell thousands of homes. Okay, 1,000 home times 480 grand. What is that? That's a bunch of complexes, a bunch of 1,000
times 480 grand.
Times 480,000. That's $480 million. Okay, 480. Okay, or I could do this. I could build 8 apartment complexes. This is probably more realistic. Each of them are $60 million and make more money. Same money. I make 8 sales here. Over here, I have to make 1,000 sales. 80% of all the home, when you see these numbers, housing starts spike. 80% of that are apartments. Look at your city. Just drive down the road. You're going to see apartments. Apartments today are what in the 50s housing was, where you saw these suburbs that started building all these homes. Home price and wage disparity today will continue to drive this narrative, okay? Home prices going up, wages are flat. So if home prices are going up, this is what wages have been doing. Wages have been doing like this for like 25 years. Home prices keep doing this, okay? Rent keeps doing this. The difference is, this is rent, this is wages, okay? And this is home ownership. If home ownership is going up and rents are going up and wages are staying flat, why would somebody rent? Why would somebody rent rather than home? They're both going up. Why would they do that? Because this home ownership requires a down payment and it requires a 30-year mortgage, a commitment. You got people moving all over the country right now. You got people leaving San Jose, San Francisco, Los Angeles. We got more migration going on in this country than we've had in a long time. We got New York, New Jersey, Connecticut, all leaving. You guys paying attention? That dude ought to be learning in here, man. Pay attention.
He's
Home
paying
price
attention.
and wage disparity. Prices are growing faster than wages. Aspiring
6.7% price increase, 0.9% wage increase.
6.7% increase in the cost of a home with less than a 1% increase in the wages. And probably there's people out there be like, hey, I lost my job. I was making 58 grand a year. Now I'm paid nothing. There ain't no wage increase for that guy, okay? He's definitely a renter. Anybody that got laid off, check this out. Anybody that got laid off during COVID will not buy a home for the next at least 2 years because it's going to show up in your credit report, okay? All right, growing debt. People are saddled with credit card and student loan debt. They're unable to save for a down payment necessary. That's 20% today. The old 5% down thing isn't happening. And cannot meet the mortgage debt to income requirements. Rent affordability. Rents are also rising faster than income. However, I don't need a down payment. I don't need the 20% down payment. I don't need the secure job, same place. So what does all that mean? It means in the future, Yahoo Magazine, Yahoo Finance, Zach Guzman, and all of you out there, all the haters out there that think I'm trying to get you to invest in my real estate at Cardone Capital. We've raised $452 million at Cardone Capital. The haters never going to invest with me. The little thinkers are never going to invest with me, okay? And you guys without money that don't have any money, you're probably not going to invest with me. Just keeping it real here. But you're going to go out and do your own thing. You're either going to go buy a house, you're going to go rent a place to live, or maybe you're going to rent where you live, pass on the house, and you're going to go buy some real estate and get started in the real estate game. I do this show every Monday to teach you how to get in this game. How can you go play this game in your marketplace, okay? Do we have another caller on? Yeah, let me talk to him, Johnny. And I need to know how many because I can't see.
We got Destin in Canada. They're coming in one at a time.
Destin in Canada. Destin, what's going on?
Hello?
Yeah, how you doing, buddy?
Hey, Grant, how's it going? So I'm actually an accredited investor with you guys.
Oh, that's awesome, man. Appreciate you being on board with us.
Love what you guys are doing. I had a question for you.
How much do you have invested with me?
100,000.
Good for you.
So I invest. I don't know if you ever heard of Kelowna, British Columbia.
Yes, I have. I've been there many times.
Yeah, it's gorgeous. So I have single-family homes here. I just wanted your take on what you think. Like, interest rates in Canada right now, you can get with 5% down, you get a 1.79% interest rate. And there's a 2% vacancy in Kelowna, and you can net 40-50% cash on cash, but you're highly leveraged. What are your thoughts on something like this?
So give me the numbers again.
Okay, so you can get let's say a $600,000 note.
Okay.
At 1.79% interest.
Okay.
And that would be, let's say, that'd be a 4-bed, and I'd add a bedroom to that, so that costs about $10,000. and I'm going to get about $4,500 a month for that house.
So the 600 grand, you can borrow money under 2% over there right now?
5%. So the house would be, I'd put down roughly $50,000.
Okay, you put 50 grand down on 600.
Yeah.
And-
Oh, sorry. It'd be a $650 purchase price. I put 50 grand down, so it'd be a $600,000 note.
Okay.
1.79 amortized over 25 years.
Yeah, but what's the interest rate? Did you say 1.79 or?
Yeah, 1.79.
Oh, that's cheap money, man. Times zero, and that's the 1.79 for 25 years for the full 25 years.
Just for 5 years.
Tricky Ricky. And then what does it do? Then it goes to market.
Yeah, then you gotta refinance or see what the market's doing. Yeah.
Yeah.
But I just want your thoughts. I know I know you don't love single family homes.
Yeah.
But like the
But let's just go over let's just go over the scenario. What do you think the income is from this deal? This British Columbia. What is the income for that from that rental property?
It'd be $4,500 a month.
$4,500 a month, okay, and you're going to be paying $10,000 a year, about $1,000 a month, plus property taxes, plus probably some HOA fees, plus maintenance, plus you're going to have to pay a leasing agent to fill the property up. But I mean, look, you're going to make, if you keep it full the whole time, you're probably going to pay out 1 month to a leasing agent.
Mm-hmm.
Okay, you're going to make 50 grand a year. 50 grand a year in the first year. You put 50 grand down. You know, you got $1,000 a month note. You're making 3,500 times 12, really times 10 probably, because you got maintenance expenses and a leasing agent. It's good while it's good, but at 5 years, you're like, okay, what am I doing here? I don't like the high leverage. That's what I don't like here. I don't love the leverage. I like the first year, but I don't like it when it's not rented. And I don't like you being obligated to this $600,000 in a market that's overheated. And you need to continue to have Chinese buyers. I mean, most of the influx into British Columbia is from outside the country, either the UK, China, or India. Is that true?
Yeah, we've seen a lot of it from Vancouver. Like what we're seeing is actually not Chinese moving to Kelowna. It's actually Caucasians because Vancouver's being overpriced. And people are going, wow, I can get twice the home for half
Okay,
the
but
price in
what's
Kelowna,
driving that? What's
and
driving?
I may have to commute.
Yeah, what's driving that is international movement into Vancouver proper, and the people that are in Vancouver proper are moving out to the suburbs. They're pushing the locals out. And look, it could continue. The difference is though, it's not Canada's not moving there. America's not moving into British Columbia. And if Trump stops Chinese trade into America, if he stops that, some of that flow is going to stop. Look, all I'm saying to you is if I were you, okay, I would take the same money and I would look at Destin, Florida for Canadians. Anything in Florida, man, start moving your money down here. If you're willing to be an investor, like if I can look at Destin, Florida right now, Destin, Florida condos. Same thing you're doing. How big is that unit you're talking about right there?
That one is, we're about 34,000 square feet, 3,500 square feet.
Okay, good. Johnny, can I show my computer here or no? So I'm looking at a beautiful, yeah, go ahead.
Sorry, Grant, but like another thing too, these houses are being picked up below replacement cost, which I know is also an important thing to talk about. Cause
Yeah.
in Kelowna to build, you're $200 a square foot, and that's without the land. So that's another important little thing is houses are being picked up below replacement cost.
Yeah.
Replacement cost.
Yeah, look, again, I don't know your market. Like, I'd have to be in the market to really understand it. I don't like, again, you're never going to talk me out of the over leverage. You're just never going to, like, when we buy deals with, I'm buying a deal right now, $164 million. I'm going to finance $100 million. So I'm putting 35% down at purchase. You're putting down 8%. I'm putting down 5 times more than you are, 4.5 times more than you are. the reason I want to do that is because I know there's cycles in the market, and I know the cycle can go down. Rents can pull backwards. I cannot have traffic. Maybe I have occupancy problems. I don't want to lose that property, okay? So hope that helps. Again, I'd have to know more about your market to know to know exactly where I want to be, but I don't ever want to over leverage an asset. Unless I was going to live in it. Like if I'm going to live in an asset, I'm probably going to finance every penny I can finance because I'm just living in it. I'm not trying to make money on it. But if I look in Destin, are they Johnny, can you see this right now? Oh, it didn't work? Okay, well, you got to tell me that because I wouldn't know that otherwise. Look in markets, folks, where the renter has a benefit, where the location's good. Like we're getting tremendous amounts of traffic right now. And then maybe he can tell you whether it is or not. We're getting tremendous amounts of traffic right now, particularly in Florida and Texas, from states like Texas is benefiting from both New York and California. Florida is benefiting mostly from New York, New Jersey, Connecticut, Illinois. We're seeing 1,000 people a day. You see it in the news every day about people leaving California. We're seeing companies, Blackstone just moved offices from New York. They're starting a division here. And then I need help, Johnny, over here on this thing, on the teleprompter. Blackstone's moving down here. Beneficiaries of the renter nation, who benefits as financial and lifestyle freedom start to overshadow home ownership as the key to the American dream. Who would benefit from that? If you look at America, okay, put America on a map.
Yeah, I can hear it.
Okay, no, I'm good, man. I hope that helps, all right? Okay, there's America for you. There's my America, USA. That's not a bad USA, is it? Okay, as people move from New York, if you look at my Instagram last week, I posted an image of people moving. There's all this traffic going like this, okay? Texas, California's going here, 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 and into Arizona, and all the way into Texas, okay? Austin, okay? You're going to see all this movement. You're going to see migration patterns. There's red and blue charts where people are leaving and people are going. This doesn't all go one way. Who benefits as 80 million people get old? Okay, in this country, you got 311 million people in America. Okay, 85 million of them, $5 trillion in cash, $5 trillion in equity in their homes. That money is going to die. You understand? I mean, the people are going to die. The money will live. Okay, you got about 80 million millennials. People that work for me, mostly millennials, mostly going to be renters just because they don't have the down payment, they don't have the security, they don't have the job experience, they don't have the credit score, and they don't have yet, I haven't planted someplace and started building like, okay, this is our home, we're not sure yet, okay? So when you got all this migration that we did not have this migration just 3 years ago, pre-COVID, pre-Trump era, cities being burned, pre-Black Lives Matter, all this stuff that's going on today, the social injustice stuff, whatever side of that you're on, we did not have that at the level that we have today. Now we have it, okay? You got all these people moving into all parts of Florida. I'm probably not doing Florida fairly. You got a lot of activity moving here. You got people going into Huntsville, Alabama. Dude, Huntsville, Alabama. You got Toyota, Mazda, you got the car companies moving into South Carolina to build cars. You got Tesla saying, we're leaving Silicon Valley and we're going to Austin. There you go. There's one for the books. None of that was happening. You got California promising they're going to go to 17%. 17% of your income in California. You make 10 grand a month, 1,700 goes to the state, not to federal. Another 38% goes to federal. So 17 and 48, 55% would go to the state and federal government. You got people leaving California. You got California saying not only are we going to go to 17, if you live here in 2020 and you leave, if they pass this law, and you leave and you go to Austin, you will pay, if you're in a certain wealth group, you will pay for 10 years. Even when you're out of the state, you will pay for 10 years after you left back to the state of California. So you have that going on. Who's going to benefit? Real estate investors will have more options at their disposal with the potential of this movement that it's going to continue to happen. Now, there's three ways to capitalize on the shift. Those who want to reap the benefits of America's shift towards a renter nation. When that $5 trillion in equity and $5 trillion in cash, okay, and the stock market rolls over, which is going to have to at some point, okay, the big boys are all saying this thing's going to roll. Who is going to benefit from this movement of 80 million baby boomers, 85 million millennials? When they're deciding where they're going to move to, a new job, new location, they're going to go to Orlando. What is that?
Florida, population change.
Yeah, population change. Can you show it? Just throw it in front of the camera right here. Look at this. Thank you, Henny. That's so helpful. I don't know if they can see that. Can they see that, Johnny? No, it's all right. I'll show you what it looks like. I'll show you what it looks like because I can't share my screen. It looks like this, almost straight up.
21.6 million in 2019.
21 moved in, or that's the population?
Population.
Population in Florida, okay? But it looks just like that, okay? Where'd that come from? They can't see my screen, right, Johnny? No.
WorldPopulationReview.com.
World population. So look, do your homework, folks. Go follow the money. Follow the money. How do you follow money? You follow people. Everybody's like, everybody knows what follow the money means. No, you really don't. It means follow the people. If you follow the people have the money. Okay? You have 80 million people. If you got a mom or dad that's older than 55 years old, they're considered baby boomers. They are going to die. I'm sorry to tell you this, they are going to die. If you have grandparents in their 70s, they're going to die. Okay? I hate to be the guy that breaks the bad news. I got sisters that are in their 70s. I got a sister that's 70, what am I, 20, 50, 62, 70. She's 82 years old. She will probably pass. I am going to die, okay? When I die, what happens when I die? First thing I die is Elena's going to be like, okay, well, we got to make some changes here, girls. What do y'all want to do now, okay? We don't want to live here anymore. How about this? You don't live with your mom and dad anymore. You moved out years ago. There's three brothers. Three brothers are like, mom died, dad died, okay? They got a house that's worth $400,000. What are y'all going to do? Keep the house? The house is in South Carolina, and one of you lives in Singapore, and the other two people live in the Midwest. St. Louis and Kansas City. You guys are going to get on a phone call. What are we going to do? We need to sell the house in South Carolina. That's what we need to do. How much will it bring? Who cares? Nobody cares, dude. One of the brothers is going to be like, oh, I remember, I have so many good memories there. The other two brothers will be like, sell it this weekend. Okay? That's what's going to happen. What happens when that happens 80 million times over the next 25 years? Because that's what's going to happen in this country. Promise you, folks, when I told Yahoo Magazine last week, Yahoo Finance, we are a renter nation. Since the Great Depression, multifamily properties and funds invested in them had yielded high returns, especially funds focused on affordable housing where current supply is limited and new construction is either non-existent or it's coming on and it's very expensive. So there creates a disparity between affordable $1,100 a month rents and a new property that's got to rent at $2,300. Everything in between that creates opportunities for you as an investor. Okay? As more and more people shift towards renting, as they move across the country, as jobs are uncertain, as COVID continues to exist, demand for properties like we're buying at Cardone Capital grows hotter and hotter. In the last 25 months alone, I have raised $450 million. $450 million. I can't show the property on. We got to fix this, Johnny. What happened, man? Man, we were doing good.
So we got to get your computer funded.
My computer, man. My computer's got some pooters problems. 8,275 units. Okay, check this out. We've got 8,275 units today. Okay, we are 92% occupied across the board, and a 98% plus, I don't know the exact number, collected. So what am I collecting? Maybe 89 economic, okay, 8 better than retail. Churches can't even operate on Sunday in some places in the country. Got movie theaters just finally opening up since March. How you got the NBA that had 45% viewership over last year because people are so used to not going to basketball games. They're like, I don't even want to watch on TV if it's going to be empty in the place. It's weird. We're in weird times right now. Even through these weird times, people continue to go to the grocery store to get their food. They continue to buy their water, okay? And they had to rent or live someplace. This space right here, okay, we're going to go to 20 to 40,000 units here before I'm done. Okay, this space, these units times $1,500 a month. I think we're off about maybe 3% of our cash flow from last year because of COVID. Even despite COVID, we continue to maintain really great collections. This is a great place for you to invest right now. Okay, now your decision has to be right now, hey, do I buy a home right now because it's getting crazy? That's what you're going to see in the headlines. Or do I rent? Your question should not be either one of those. Your question should be, how can I take advantage of the move to rentals? When the next downturn occurs, when the stock market rolls over, when the demand for workforce housing continues to increase, will not go away, folks. It will not go away. There's nothing in this country, nothing, that is going to change this. Not one person running for president or one political office has any plan to increase wages in this country. What if jobs fall off this thing right now? We're at 8% unemployment. That means 92% of the people that want to work are working. What if this goes up some more? When the next downturn occurs, unless we're in it right now, when the next time the stock market rolls over and it goes from 28,000 down to 19,000 and people lose a lot of money being invested in all the tech companies, when demand for workforce housing continues to increase, where do you want to be? You want to be in the rental business. You want to own rental property where the renter pays for the cost of the property taxes and the debt and the maintenance. Real estate lending funds, whether they're passive, you're a passive investor, or whether you're an active investor, okay, have been able to put money in funds. You're able to put money in funds that provides you, if you're a seasoned professional, with capital protection, cash flow, depreciation, and long-term appreciation. There are certain lending funds out there that are able to facilitate through limited period fix and flip transactions. Some people go in, fix it, flip it. They're in and out in 2 to 3 years. It's not what we do. There's syndicated guys out there. You could literally lend them money. Say, hey, I'll lend you the money to do a build deal or a flip deal. Cross your fingers. Hope they get in and out quickly. And there's a chance for you to make money there. We don't do that at Cardone Capital. We buy assets. We keep them for long periods of time. We take out the flip possibility. We take long-term debt on them, and we wait for cash flow long periods of time, over long periods of time, 7, 8, 9, 10 years. Sometimes refinance at 7 to 10 years, keep the asset, get our money back, and just continue to maintain a position in that property. Look for ways for you to get your cash, okay, to take advantage of flat wages, instability in the marketplace. Where do you want to be? What if there's inflation? If we have inflation in America, which we haven't had in a long time, what's another form of inflation? Paper destruction. Okay, how do I destroy paper? One thing, I could burn it, I could tear it, you could steal it, or what else could I do? How could I destroy this paper?
Not use it.
I could print more of it. Okay? So we're playing Monopoly. We started with the same amount of paper. Okay? I go into my closet, I get another Monopoly board, and I bring out the same amount of paper. We just keep the board in the closet, and I take all the paper out of the second board, and I say, look, everybody's got more money now. See, the property's rent has to spike for the game to stay the same, for the risk to stay the same. So one way to destroy the value of your property or your cash is to tax you, property taxes, income taxes, federal taxes, or the invisible tax. And the invisible tax is the destruction of cash. How do you destroy capital? You print more of it, okay? When we print cash and things inflate, what inflates first? Okay, if I print twice as much of this is now worth $50, everything that's real doubles. Long-term funds, real property funds, even though they are less liquid, and you do not want to be liquid when you have inflation. You want to be illiquid. Listen to me. You do not want liquidity when we have inflation. You want, if you were in, where's Francisco come from? Venezuela. I had a friend in Venezuela. I said, man, how is it down there? Okay, I was at church and I saw him. I said, how is it down there? He's like, Grant, in the morning we call and say, how much money do you have? Good. Go out and bring something back. And I'm like, what are you talking about? He's like, bring what back? He's like, anything, but don't bring the money back. Like bring what back? He's like, a shovel, bag of cement, anything that has real value. I'm like, are you serious? He's like, no, I'm dead serious. Shovel, hammer, nails, like anything. We'll take anything. We don't want the money. I know we haven't lived like that in this country for a long time, but we'll get back there, okay? Look for real estate, folks. It's a great place to protect your capital. When I buy real estate, this is what I think of. 4 things. And you can do what you want. Clearly, you're going to do what you want anyway. I'm just giving you a heads up, all right? The real estate agent wants you to buy a house. Hey, I might go buy a house. You should wait, put that off right now, and get real estate that, number one, protects your capital. The reason people are buying homes right now, the rich people are buying homes right now, is not to protect their capital, it's to protect their health. They're worried they're going to get COVID in their condo in New York. So they're like, I'm going to go buy a house in Palm Beach. Some of these people are trying to protect their capital because they're in New York. They're not worried about COVID. They're worried about Guemo. What's his name? Cuomo. They're worried about taxes going up. People are leaving California. They're like, screw the weather. I'm going to Austin. I'm going to Austin because I want to protect my capital from tax implications, okay? Number 2, get cash flow. Property, good investments should pay you cash flow. This is something that Warren Buffett almost never violated in the best of his days. 3, you want long-term appreciation, or at least the chance for appreciation, that this asset will go up in value. All real estate does not go up in value. I can show you a third of this country that is worth less today than it was worth 20 years ago. I can show you property in Beverly Hills today that is worth less today than it was 10 years ago. So all property does not go up. Look for long-term appreciation. And the last thing is look for big D. I call it vitamin D. Vitamin D is depreciation, okay? I bring in $5 million of income and I write off $10 million of income. I just finished having a meeting in there in my office, okay? I'm going to close this year, before the end of the year, I'm going to close about $365 million worth of real estate. On 12/31, if I own that real estate on 12/31, check this out. I knew I was in the neighborhood of this. I did not know this because we have avoided doing this in the past just because of our investors. On 12/31, if I close this asset on 12/31, and let's assume that 315 million of this is equipment, building, not land. Okay, 315 million of the 365, and I close on 12/31. I own the property for 1 day in 2020. How much can I write off that day? I owned it 1 day. 10%. 315 million. We didn't do it last year or the year before because investors were coming in and we held it off so I could give you your portion because you came in on the 1st or 2nd. I just found that out this morning. I said, oh yeah. Well, this year, if you don't have your money in the deal already, on 12/31, because I'm going to close as much as I can this year, because I want to wipe it off this year. I need it bad this year. So I just found this, man. I'm like, oh my God, so good to have this. So this is the reason I own real estate, right? Because I can literally take, particularly in my situation, because I'm considered a professional investor, I could take, if I had $315 million of earned income in 2020, I could zero out right there. That's why Donald Trump doesn't want to show his taxes. You guys are going to look at it and say, dude, well, it's not even fair. It's not fair. Play the game. Hey, thanks for watching Grant Cardone, Cardone Zone. Every Monday I come to you to talk about real estate. If I decide to change my opinion of this game, I will let you know. I'll be here and be like, I was wrong. Things have changed. Time to buy a home. Until then, invest your money in real estate until you get so rich, you can go buy a damn ship if you want. You can just do dumb stuff, okay? My name's Grant Cardone, Cardone Zone. Thank you for watching.